Today we welcome James,
A lot of times I'll be up at, anywhere from 4 to 4:30 a.m.
who actually sits 11th in 11th place on Kinfo's all-time leaderboard with 1.1 million in verified profits.
Short sellers are the only people who are incentivized in real time to root out fraud. A favorite pumper? I don't know. Biggest stock pumper in the market right now is Elon Musk.
Yeah. Welcome back, everybody. Today we welcome James, aka Stockwonk, who actually sits 11th in 11th place on Kinfo's all-time leaderboard with 1.1 million in verified profits. As always, we're going to jump into his trading strategies, industry transparency, and some top tips for new traders. Just a very quick reminder, you can get Kinfo Pro and Pro Plus for free for your first month. You just need to log in and click upgrade to access the advanced reports and analytics. Now, James, how are you? How's trading? How's life?
It's good. It's just, it's kind of busy for me. I've got 2 kids and stuff, and it's summertime, so kids are home from school, and got a lot going on. So.
I thought that trading was meant to be freeing up time, so you weren't chained to the desk.
Yeah, it is helpful. At least me being on the West Coast, it's like the downfall is I have to wake up so early, but a lot of times I do most of my trades in the morning anyway. So, by the time the kids are awake and stuff, I'm already kind of partway done with the day anyway. So,
now we're just talking about it a little bit earlier off air. So you're in the West Coast, you're in Seattle, so it's the home of Nirvana, home of Pearl Jam, home of the grunge, home of Starbucks. But it also means it's the home of 4 a.m. market opens or 5 a.m. market opens. Is that right?
Yeah, 4 a.m. is kind of is usually I'll have I've been kind of lazy lately. I've been taking a little break lately anyway, but yeah, for, a lot of times I'll be up at, anywhere from 4 to 4:30 a.m., so I can do, because I have a lot of pre-market strategies that I've been working on and developing, and yeah, if I want to trade pre-market, I have to be up at those times. So
does it get any easier after a while of getting up at the same time for a couple of years, or?
Yeah, it's not too bad. You kind of get used to it. I've never been a coffee person, but when I started doing that, I did become an energy drink person. So my fridge is usually stocked with energy drinks.
Yeah, makes full sense. They're terrible for you, but they're good for you when you need them, right?
Yeah.
So from November,
I do at least the sugar-free ones, So
me too.
So it's just the caffeine. It's just the big dose of caffeine that I'm getting.
From November 2020 to around March 2021, you made almost $1 million in 5 months, according to your Kinfo. What the hell happened there?
I think it was just one of those times where it was the perfect meld of strategies that I had been working on and market conditions, where it's just like once, and when your account starts to compound, it goes crazy. Like it was just unbelievable. I especially remember January of 2021. I was trading a lot of gappers, like shorting big gappers and stuff. And, it used to be like, you might get, 2 or 3 gappers a week, maybe, but now we were getting like 4 or 5 gappers a day. Like, it was just unreal to me.
Yeah.
And I just took full advantage of it. It's like this, like it just worked really well with strategies I'd been working on. And so, yeah, I just took advantage of it, and my account compounded like crazy during that time. So
you're shorting those gappers. You shorting the gappers of
I was shorting the gappers, like, because a lot of them would turn into all day faders, and you could short sometime in the morning. Obviously you'd have to have the right timing and stuff, and then they would fade most of the day, and you'd get big multi-hour trades out of them. And then when you were getting multiple gappers, it was just it was pretty unbelievable. Especially that January and February. Well, I know in 2021 I made almost all my money in 2021 literally in the first 3 months of that year. It was just unbelievable.
It's absolutely crazy how that works, though, right? But what I found as well, because I was a massive proponent of shorting the gappers as well, and what I found is when there's so many stocks gapping up, there's just not enough demand coming in to sustain every one of these stocks that gaps up. So naturally, the more that gap up, the more that are likely to fail. And obviously, we're all trading with common sense, saying, well, that's got dilution, that doesn't have much volume, and that one's got the best news story. So let's leave the one with the best news story and the lowest float, and let's go after these four. And like 9 times out of 10, it would work. I mean, is it similar for you, or?
Yeah, it was kind of similar for me. You know, I will say it's obviously things have changed now. Not only we're not getting as many gappers, but the nature of the gappers has changed. So back then, 2021, a lot of the gappers, they were still fairly, I would say, they weren't like ultra low float. Like you'd still have gappers that would have, 6-7 million shares in the float, which is, low, but not extremely low, and you were also getting a lot of gappers that still had double digit floats. And so I just think the probability of them fading was just a lot higher. But what I've noticed is, market conditions have changed. So what happened is, then when you got the bear market of 2022, I remember I saw a stat that in 2021, there were almost no NASDAQ stocks trading under $1 per share, which was just unbelievable. Like it was just amazing. Like nothing was, So what happened in 2022? Well, that was no longer the case. A lot of penny stocks fell below $1 per share. Well, if you're on the NASDAQ, you've got that minimum bid requirement of, I think it's $1 per share. And so now what you've had is a lot of those small cap or micro cap stocks have done a lot of reverse splits. And so now we got a lot of the gappers you're seeing are these really ultra low float stocks. We're talking 1 million shares in the float, sometimes less than 1 million shares in the float and stuff. And those are actually a lot trickier to short on a gapper. Like I used to have rules in 2021 that I wouldn't even short a gapper that had a market cap less than 15 million. Well, the problem is now is a lot of the gappers have market caps of less than 15 million, right? And so, so I've had to work on other strategies now. Because, what I did back in 2021, it's not that it still doesn't work. It's just that there aren't many stocks now that fit that criteria that I have anymore. Yeah. Like it's just the gappers are very different now. And so I've had to spend really the past couple of years working on new strategies, which takes a lot of time. I mean, that was the other nice thing about 2021, 2020. There were so many gappers. I was able to gather all this data, like a ton of data on gappers. But now that there's not as many gappers, I've had to work on new strategies. And being that a lot of the strategies that I've been working on, or I would call our lower frequency strategies, they don't present a lot of trade opportunities every month. It takes a long time to get enough data for me to really hone in on a good rule set where I think I'm going to have a good edge. And so, I've, that's why, I made all that money in 2020, 2021, and then I kind of fell off. And, the past few years haven't been that good for, actually last year was a red year for me, my first red year in a long time. And this year I'm green, but not by, only by, not by a whole lot. I actually was off to a great start in February, again, because of gappers. There were a bunch of gappers in February for some reason. And then, but then I went through a slow bleed because when you're working on new strategies, when you don't quite have enough of a sample, what happens is as you gather more data, you keep discovering weaknesses or problems in the strategies. So it's been a lot of honing and refining my strategies right now, which I'm okay with because I'm kind of playing the long game, right? I'm going to be a trader for the next 10, 15 years. And so I don't mind spending a year or two just working on strategies that I know, because I want to be able to trade a variety of market conditions. Like I said, I can't just rely on the gapper strategies I had from 2021. I need to, and I don't want to just be a short guy that shorts all the time either, which is what I was. And so I've been working on a lot of long strategies, which I'm finally starting to fine tune and get down. But it's taken some time for me to develop a lot of the new stuff. So,
100 1,000,000,000% understand where you're coming from, because it took me 3 or 4 years to find the gap strategy, and it was kind of obvious, right? Because it had such high frequency. And then now it kind of doesn't work anymore because the market conditions have shifted. I just got stubborn and stuck and didn't shift. Then I started losing money because I didn't shift. And then I just started thinking, I don't want to wait another 3 years to find another pattern. But we're going to jump back into this. I'm just conscious. We're going to jump quickly into a quick break from one of our sponsors today, and then we'll jump straight back into this. Unleash your trading potential with Cobra Prime. Cobra Trading has released the ultimate trader package, crafted through strategic partnerships with top businesses and software innovators. You can now gain access and discounts to leading trading tools, from advanced analytics and charting systems to trading platforms. With over 15 partners and growing, Cobra Prime lets you customize the perfect trading package for your needs. The more you trade, the more points you can earn to unlock additional trading tools. Click the link in our YouTube description and sign up to Cobra Prime to elevate your trading experience. Okay, we are back. And I just want to say the most challenging thing for me is to find that next pattern. And you're treating it like a long game. You're prepared to do the 3 and 4, 5 years again. I mean, my next question for you was to ask you, what separates you from the other 95% of traders that fail? Because I think we're touching on it here.
Yeah, I think I think it's multiple things. Number one, I think is you have to remember, you do have to play the long game. It can be, especially when you're trading well, it can be really easy to get caught up in the gains you're making. And I think too many traders, and this is a mistake I made back in 2000, my first round as being a full-time trader was back 2013, 2014. I was, again, one of the top traders on what was it, Profitly at the time.
Yeah.
This was before Kinfo and stuff. It was a similar thing. I was doing great. I was making great gains, but the mistake I made back then is I wasn't paying myself. I wasn't regularly pulling money out of my accounts. And because, my attitude at the time was like, well, I'm making so much better percentage gains than I would in a savings account or, in a long-term investment account. Why would I take that money out? Right. You can't have that attitude because you never know when market conditions will change. You never know when you can make like a catastrophic mental mistake where you lose a bunch of money because you do something stupid, right? So you should always be taking money out of your trading accounts all the time, especially if you're not trading well. But even when you're trading well, you should be taking money out. You should be paying yourself and taking that money, putting it somewhere safe, savings, long-term investments, whatever. And that's what's going to allow you to get through the hard times where things slow down, because I guarantee you nearly all traders will experience a slowdown or a big drawdown at some point. Like you will. It's practically guaranteed. And if you prepare yourself for that by not getting overconfident and putting money away, which I was smart this time. All that money I made 2021, 2020, I kept most of that money because I pulled a lot of the money out.
Nice.
Actually, the account I'm trading with now is very, very small relative to what I was trading then, because I haven't been trading as well. So I'm just like, I would rather risk small amounts of money and make sure that I'm getting my consistency down. I can always put money back in the account once I'm, trading well, or trading consistently.
100%.
Because here's the deal, I know you've got the pattern day trader rule, but let's just ignore that for an instant. Or let's say actually, let's not ignore it. Let's say you've got a $30,000 account and you're not trading well. Well, adding another $30,000 to your account is not going to make you trade any better, right? It's not like, if you're not making money on that $30,000 account, you're not going to make money on a $60,000 account. So, so you should be trading consistently well before you actually either put more money in or increase your size or whatever. And if you're an experienced trader or whatever, or even if you're a beginner trader, if you're not trading well, that also means if you're not trading well, cutting your size down, reducing your size. Again, you got to be thinking the long game, like thinking that, hey, I want to be doing this for the next decade. And if you lose all your money, you won't be doing that. So,
Did you have a catastrophic blow up? You were mentioning that you were kind of you clicked with trading before making money, but then I think you said you had a big blow up.
yeah. So back in, so I was trading really well, 2013, 2014, all the way through summer of 2014. And then I think it was October 2014. God, what were the stocks? There were these two stocks that made these huge runs that I tried shorting, and I just made the worst mistake you can make in shorting. I didn't really have I kind of had more of a mental stop, and then I added to my short, and it just kept squeezing against me. God, I can't remember the ticker symbols now. I'd have to go back and look at my notes or whatever. But yeah, so I remember I think I lost like 50% of my trading account in like one day. And I still had money to trade with after that. But the problem I had at the time was I had given up my other sources of income at the time. And so now I was stuck in a situation where I have to make money trading, but now I've lost half of my trading account and I have no other sources of income, and so that was another mistake that I made. And then that's a recommendation I have to other traders out there. If you have other sources of income, I know the idea of being a full-time trader and doing nothing but trading sounds really sexy and awesome, but it's really not. It's like, it's much easier to make money trading when you don't have to make money trading. Like, even if you just have a nominal income from some other, side gig or side job, I guarantee you your trading will be better because then you're not under the pressure to have to make money trading, because it really messes you up psychologically when you're suddenly, when you're literally dependent on making money trading. Like, it's just, it's a tough gig to just do full time. So
100% understand, 100% agree. And I mean, that was like 2014. So you just hit $1 million around 2020, 2021. So where did the 6 years go? Were you just like, F this, like, or was it, did you pause? Or
yeah, well, I kept trying. I kept trying to trade through 2015, but I just kept bleeding more and more money, and I finally was just out of money. And it really psychologically, after that big blow up, I was just not in the spot. I should have stopped trading then, because mentally I just wasn't in the right frame of mind to trade anymore. So what I did was 2016, 2017, I spent really a couple years. I worked on my other businesses, building my income in my other businesses. But I still paper traded during the time. So I would just paper trade, work on my strategies with that idea in the back of my head. If I can show consistency paper trading, and once I've built my other businesses up and I've got enough income, I can, open a new trading account and go from there. So yeah, I spent, probably a good couple years paper trading before I reopened a small, actually it was, like we were just talking about before you started this, a short trader account. I remember I opened a small short trader account around 2018. Was doing okay with the short trader account. And then I had enough capital. I didn't have enough capital to be over the pattern day trader rule, but I was able to split my money between 3 different brokers. I think it was Interactive Brokers. And then I was able to get an account directly through Vision Financial at the time. So I was able to get decent borrows through them. And then I think I had a third broker. I don't remember who they were. So I at least got 9 day trades per week, because I was under the pattern day trader rule. And then, so I just started to work my way from there. And that 2 years of paper trading and just working on strategies really helped me, because it set me up for suddenly, doing 2019, my account grew nicely. I was now over the pattern day trader rule. Then I hit 2020, and then things obviously really started to accelerate in 2020. So anyway, so really, I mean, if you think about it, those good, that 2020, 2021 was really set up by spending a lot of time in previous years, just, working on strategies and paper trading and, learning from my past mistakes. So
There's a couple of things that come immediately to mind. The first thing is, I mean, can you say how much you lost on that loss when you lost in 2014? And how much you made? Because you made a lot and then you give it back, right? So it's not like you lost.
Yeah. I was like, where was I at? I mean, it's been like 10 years now. So it's like, I remember I wrote a blog post about it. I want to say that I lost something like around $80,000 in one day or something like that. I don't remember the exact number. Maybe it was 50,000. It was like anywhere from 50 to $80,000 in a day. And so, yeah, it was just,
Look,
it was tough.
I know exactly how you feel because I've had a similar path to you, in 18 and 19 with the gap and crap strategy as well. 18, 19 was golden for the gap and craps in 20.
Yeah.
I had a similar thing. I turned $600 in over 100,000. I got right over the 100,000 mark. I got to like 103,000, but I was doing a bunch of dumb shit. And like I was shorting AMC, and it was at the time when it was squeezed. And then I was getting lucky because like bad news came out about Ryan Cohen or whoever it was, and I was getting lucky. And then I lost 30 something thousand in one day on a Cobra account as well. And I was just like, dude, that was it's a tough day to lose 30,000. If you lost more than that, it's you just sit there and think, what the hell just happened? No.
Yeah. Oh yeah, that's the thing. It's just like, yeah, it's hard to mentally recover from that. The interesting thing is now is like, I'm actually really good now at obeying stop losses and things like that. I'm really good at not, losing a massive amount on any one trade.
How did you fix it? Because you had bad discipline, right? You obviously had really bad discipline because you added to it.
Yeah, I think it's just learning the hard way, right? It's just, you lose, those times where you don't obey stop losses and you lose a huge amount, I mean, even when I was trading well, like 2021, this was a little bit of a different situation, but again, I'd done so well shorting gappers, and then I think it was end of May. I remember shorting this one gapper. I don't remember the ticker. The ticker symbol started with a V, but I don't remember exactly. I remember I shorted the gapper, and it kind of faded a little bit into the market close, so I decided to hold the short overnight.
Yeah.
And then the next day, I remember waking up the next morning, and it had gapped up way above the original gap.
Yeah.
And I think I lost something like almost $100,000 on that one trade. Of course, I'd done so well that year. It still, it didn't hurt me as much as obviously in the past, but still, it's like, so it's just those things that have caused me to change my rule sets. Now I'm actually very it's not that I won't hold shorts overnight. I will, but I'm very, very selective about what I hold short overnight and what my size is and like all that stuff, and it's all just been from hard lessons I've learned over the years. And so now it's like, yeah, I'm really good at obeying stop losses and stuff. For me now, the challenge has been, like I said, is just getting enough data on all that, because I swear I've been working on probably 20 to 30 different trading strategies all at the same time. And so gathering enough data on each one of these strategies, I'm good at following the rules on the strategy. But the other thing is because, obviously I'm looking for certain types of patterns. But the market has an interesting way of, like I said, either revealing a weakness in the strategy that you're developing, right? Or I'll be faced with situations where I'll be presented with it's kind of the pattern that I'm looking for, but it's kind of like, it's kind of on edge. Like,
yeah, I know.
Like, does it fit the pattern? Does it not fit the pattern? And it makes it hard to, it's like, it's one of those things where I'm trying to find the right balance between not having a strategy so general that you kind of lose your edge, but not overfit the strategy to the point where it's not a tradable strategy, right? And so that takes a lot of work and a lot of just observing things over and over and over again, So
what's the hours that you're putting in that, say, on a day to track all of these strategies?
Oh, geez. I mean, It varies, but I mean, I could spend several hours each day, and especially on the slow market days, I'll spend time just, it's in fact, recently what I've been doing, um, I discovered a new site called Edge to Trade.
Ah, yeah, I know
Um,
it.
yeah, and they have some nice historical data that you can get, especially on gappers. And so I've been taking some of the strategies that I've been working on and then basically doing a lot of out of sample testing, like going back to, 2017, 2018, 2019, just making sure, like, are the strategies that I do now, would they have worked back then? And, gathering enough sample um, um, and I feel like now I'm fine. I've actually taken a break over the past few weeks, just started paper trading again because I just feel like I want to get. I feel like I'm close on most of my strategies, but I think and I'm heading to the UK in a few weeks anyway, so it's like I'm not going to trade when I'm over there. So I thought, why not take a month off or so, and then when I come back, I'll kind of hit it again with real money, um, but yeah, it's just one of those things where that's the other thing about trading. It's a long game because you have to, there's no way around the work, right? Like, people see trading and all they think about is like you making all this money in a short period of time, but you don't realize like the amount of work that has to go into like learning, like you have to constantly watch the market every day. Like you have to constantly watch how these stocks work and and if you watch the market enough, you will start to see patterns that start to repeat themselves. And you'll just be like, oh, wait, I've seen that before. Oh, I've seen that before. Oh, I think I could develop a strategy there, and that's really how a lot of the strategies I've been working on. Like I said, I used to like short a lot. I've been working on long strategies because I think about all the other times where I got caught in short squeezes, where I shorted something too early or whatever. And I would think, God, that would have been a great long, right?
Yeah.
I was like, there's got to be a way to identify those potential short squeezes. That's something I've been working on a lot lately. And I feel like I'm starting to get some strategies and some patterns down because like the best longs are the ones where you can actually get in on a short squeeze,
100%. No, but it's funny because the way you describe it, it makes me think of I suppose there's some element of luck in trading in the fact of finding the strategies. Obviously, some people are better at finding strategies than others. Some people have a more of a natural eye for it. But there's also an element of luck of, are you going to put your spade in that area where there's going to be gold underneath? Because there's a million different things that you could try, but it's catching the right one at the right time to a degree.
Yeah.
I'm just going to ask you a few questions about transparency and furus, because obviously Kinfo was a top, it verifies the top transparent trader. So I was curious to know, on a blog you referred to yourself as an evil short seller. Now, what I wanted to ask you is, are the short sellers really the evil people in the market, or are the furus and pumpers the true evil in the market?
I would say it's the pumpers. It's hard to be a short seller. I love how people like want to blame short sellers for every negative thing that happens to a stock, but it's like, I don't think these people who say that understand how hard it is to be a short seller. I mean, God, like Jim Channel's probably one of the greatest short sellers of all time, basically had to close his fund, right? I mean, one of the best investigative forensic short sellers that, I mean, he's one of the guys that helped, uncover Enron, right? And all the scandals and accounting fraud and stuff going on with them. And it's just like, the problem is we're in a market now where, some people have heard this. It seems like fraud generates alpha. It's just like you've got all these companies that are literally kind of getting away with fraud and broad open daylight. Makes it hard to be a short seller because if you're the type that, and this is what Jim Channel said one time, which, the problem with the markets is that short sellers are the only people who are incentivized in real time to root out fraud, right? Like,
yeah, that's very
true. Like, where's the incentive? Like, there's tons of incentive for people to pump stocks, right? I mean, there's all this incentive, and but like, where's the incentive for people to root out fraud in a company? Like, there's, the only people who do that are investigative journalists, and there's not that many, or short sellers. And so it's just like, short sellers are kind of the one of the only police in the stock market, right? You need them. You really need them, because you need those people that are gonna like expose fraud and scandal and stuff like that. Because there's a lot of it, in the markets. And I always say that if Enron were to happen today, I think they'd get away with it.
It's getting worse, not better. But I think the quote that you've just said, short sellers need to be the police of the market. I mean, I think it's an unbelievable. I don't know if you've heard that from somewhere or if you've just coined that, but it's an unbelievable quote, because people say that short selling it's un-American to bet on things to go down. Yeah. But it's like, it's un-American in a crazy market full of fraud to not let anyone do anything about it.
Yeah, I know. It's like, it's just like people just. It's amazing what people will forgive as long as their number go up, right? Like, it's just like people don't care about fraud or whatever as long as the number. And you even see that with the regulators, right? Is a lot of times the regulators don't do their job until after a stock has collapsed or whatever. Then they come in and say, lost. "Oh, look at," Then they'll come in and do something about it, but they won't do anything about the fraud if when the stock's going up. It's only after it's eventually collapsed.
No, but I think I remember that HKD. HKD was one of the craziest Chinese tickers that I've ever saw. It went from three to 1,000 or whatever it went to. I just think, how is that possible? And then I saw Zach Morris he was like SEC organization. 1 year later, nothing happened. He's like,
no, it's like.
Like, but do you have a favorite pumper?
A favorite pumper? I don't know. I haven't been tracking the pumpers lately. I don't know. I feel like the biggest stock pumper in the market right now is Elon Musk.
Yeah,
I mean, you even just saw it today. You saw it in the past month. Like basically the stock was collapsing, everything was going bad, and so they was it Bloomberg or Reuters came out with the report that they weren't going to have a Model 2 or whatever. The stocks is going down. Suddenly, Elon comes out, "Hey, we're going to do this robo-taxi reveal on August 8th."
I remember this, yeah.
Completely stops the stock from going down. Now the stock has skyrocketed on nothing. And then finally today it comes out that, "Oh, no, just kidding. We're not going to do a robo-taxi reveal in August." He totally pulled it out of his ass. Right? It's so just blatantly obvious fraud and stock pumping. And we're talking like a stock that is, trading for hundreds of billions of dollars in market cap. Like, it's just people talk about GameStop and AMC, being the meme stocks, but really Tesla, I would say, is the original meme stock because it still trades like a meme stock. And it's like,
it does.
I would say he's the biggest stock pumper, out there right now. Like literally, actually someone had a funny meme, like, the whole astronaut holding the gun at the other astronaut in front of the Earth. And it's like, I saw a meme where the astronaut was like, "Wait, so the stock has been the product the whole time?" Talking about Tesla. He goes, "Always has been." Like,
now, but I was actually long Tesla for a while. We just sold it. We just sold most of it as long with my fiance. We took like 80% in a couple of months. I mean, it's literally a meme stock, but it's got some fun. It's got some fundamentals under it. So it's like a meme stock, like plus turbo meme stock. Because it's actually not a piece of shit. It's like, it's a real company, but it's a meme stock. It's like, it's a good long. But in terms of Kin4, you're on Kin4. You've elected to be on Kin4. You're on the leaderboard. Yeah. What was your motivation to be transparent, to be on Kin4, to decide to display your information?
I did just because traders are notorious for like I mean, most traders are just full of shit. Most traders, like, they'll post their gains, but not their losses. They'll fake stuff, they'll post fake numbers. Like, you know, um, if you were to go on social media, it gives you a very misleading perspective on how successful traders are. Um, it's not really, you're not getting a realistic view of how difficult trading is. Um, and for me, it's like I've just always been a real guy. I want people to understand, hey, trading's hard. And here's my ups and my downs, right? I've done well, but I've also struggled at times, um, and I just want to give people real information. Hey, trading's hard. You can make a lot of money from it, but you can also lose a lot. And you got to be in it for the long game. It's a lot of hard work. You may actually put more work into it than a full-time job. I mean, it sounds really sexy, but there's a lot of, but there's a lot of, downfalls to it too. And I just, kind of want people to just have a realistic, or just to know that, hey, I mean, this is what, I'm not hiding anything, right? I'm not, yeah, you can see my gains, but you can see my losses too, so.
Like, to tell you the truth, I've worked in advertising for 10 years, more like 14, 15 years. I've worked in advertising, and I've worked across a load of different industries. And then obviously, because I'm a trader, I thought, oh, why don't I do marketing and advertising in this industry as well? And like, it's such an ethical conundrum for us, because it's like, I'm looking on YouTube and I'm looking at, okay, so if I work for some companies, what is going to get someone the most views on YouTube is a thumbnail or a tagline or a headline. And it's like, all of it is like, do this $1 million strategy in 3 simple steps, or the easiest plan with an 80% win rate. And I'm like, it's a moral dilemma for me, because I'm like, I want the clients to do well, but I physically can't put that on YouTube, because it's just lies. Do you know what I mean? It's misinformation.
Yeah. Oh, totally. And I've faced the same issue. So, basically my other industry I work on is in the fitness industry, and the fitness industry is very similar. Yeah. It's just full of bullshit, right? Yeah. Like, people promising, oh, you'll gain all this muscle in so many days, or lose all this fat in so many days. And and all this just snake oil. And it's just a similar thing, but that's the stuff that sells, right? That's the stuff that sells. And and there's a lot of people that take advantage of it. And I won't, it's like, I mean, could I make way more money in the fitness industry? I given my background as a scientist, I could probably come up with something that sounds remotely scientifically plausible, but it's total bullshit. But I could probably sell it and market it, but I just can't do that. Like, I just can't do that.
There's a lot of people that can, who get ahead, but I mean, the only thing for me that I think is like, okay, I'm gonna use that as the thumbnail, and then the first thing you're gonna say on the video, whoever it is, the client, is this isn't actually true. Like, oh, do you know what I mean? Just to get them in. And I'm sorry it's clickbait, but I'm not lying. Sorry it's clickbait, but at least I didn't lie. So, we're very, very aligned. I mean, just jumping back to trading, in terms of, I suppose a good question is, if you could give yourself advice when you just started, knowing what you know now, what would it be?
I would say 2 things. Play the long game. Don't get caught up in the short, and then just pay yourself, put money away, and constantly take money out. And if you're not trading well, just trade with less money, or take a break and paper trade for a while. The market's not going anywhere. Don't be in a rush to make money. That's what I would tell my younger self,
Are you always using hard stops, or do you sometimes still use mental stops?
No, I use all hard stops now. Like, it's always like, I literally put in, as soon as I put in an order, I put in a stop loss, a stop order. And thing that sucks about stop orders, yeah, sometimes you get some slippage and stuff, but you know what? It's like, that's my trading plan, and you got to stick to it, right? I mean, There are way too many times where I wish I had obeyed a stop loss, when I used to have mental stops, and now everything gets a hard stop now,
So
So,
when was the last time you used a mental stop?
oh, it's been years now.
Really? You've never
Yeah,
slipped?
yeah,
Never slipped? Never just thought,
yeah. I
oh,
don't use
this one.
yeah, no, I don't use. Well, the only exception is I don't do many long term shorts. Uh, but like for example, I have a small long term short on Tesla, and with this recent run, I'm a little underwater on it, and I had to stop a little lower than where it is now. But my position size is so small, and I haven't added to it. And I also have a bunch of puts where it's just like, the worst that can happen with a put option is it just expires worthless. So it's like, and I have those kind of spread out at different strike prices and different expiration dates. So that's a case where, yeah, I mean, that's where I have more of a mental stop, but my position size is pretty small anyway. But as far as all my day trades and stuff, like literally it's all like everything. Like I don't remember the last time I used a mental stop on a day trade. It's always just been um, straight hard stops. Now, sometimes I may move the stop a little bit, like by like 5 cents or something. If I feel like it's a little too tight or something like that, I'll move the hard stop. I might give something a little bit more wiggle room, or rather than risking 1R, maybe I'll risk 1.25R, if I feel like, oh, I think there's some resistance in that area. Maybe I need to give it a little wiggle room, and I'll do that. But I still have a hard stop order in, so.
Yeah, that's impressive though. It's impressive that you've learned from your loss, and you basically took a big loss. It ended things temporarily for you, but you were humble enough to come back and think, no, I'm not going to have no ego. I'm not going to think I can run back into this with the size I used to have. Completely were humble, no ego, paper traded for years.
Yeah.
And then thought, okay, I've got this again. So, I mean, it's brilliant how you've developed discipline. It gives me hope as a trader that one day I might make the elusive comeback and when the market conditions are right. In terms of if it was a brand new trader, what would you recommend that did to get started? Because I know you're doing crazy research with patterns, and I guess it's stats, right? Are you tracking stats and data?
Yeah, I just have tons of Excel spreadsheets. Like, I'll notice just some pattern that I think I could take advantage of, and then I just try to find a bunch of stocks that fit that pattern. I'll keep an Excel spreadsheet of the date and the ticker and the float and like all that stuff, and try to see statistically if there's an edge there. I think for any beginner, I just say you just gotta like watch the market like every day. Like just first kind of decide what you're interested in trading. Are you a small cap? Are you interested in large caps? Because they all kind of trade differently. Are you Forex? Whatever. Are you crypto? I don't, whatever you want to trade. You kind of just gotta, nothing beats just time in the market, like just seeing things over and over and over again and watching how things develop. Because now that, and get, you can get ideas from other traders, but here's also what I want to say. Don't bother trying to follow another trader. What I mean is don't try to follow another trader's trades. It'll never work. Like I have never had success trying to follow another trader's trades. Like there's too much slippage. A lot of times you just don't have a firm understanding of what they're actually doing. Now you can get ideas from them, but you have to take those ideas and make them your own, which means you still got to put the time in the market. Like some of these concepts, shorting gappers, shorting multi-day runners, the big parabolic, Tim Sykes type squeezes, those concepts have been around forever and they're still profitable to trade, but you have to it's up to you to find the way that you can trade those things. Right. And that's where the edge is. Like you can't just short any gapper if it, like just shorting gappers, what does that mean? Like how much of a gapper? Where do you put a stop loss? What time of day do you short it at? What type of pattern are you looking for? That's where the edge is, and that's what takes the time to figure out.
No, 100% agree, and I think speaking to Huddy on a earlier interview as well, and he said the exact same thing. I mean, where I stopped is I found a pattern, learned the edge, figured out the exact time to short it based on, say, if a gap gaps up 50% and it's got this much volume, probably the time that it's going to start to fail is like, let's say 9:50, 9:55, 10 o'clock, 10:05, and it's probably going to go 16% from its open by the time it's looking to fail. I had it all down, but when that stopped working, I didn't think, should I adjust my metrics to reflect the changes in the pattern? I didn't do that.
Yeah.
I just thought, these metrics have worked for 2 years. They're not going to change because psychology doesn't change, so the market shouldn't change. But my naivety was that psychology does change and the market environment does change, and exactly what you were saying before. Maybe it was a strong bull market, so companies were naturally doing well. And now it's a thing of scams are doing the reverse split, or sub-zero stocks or sub-dollar stocks are doing splits, and then they're pushing because they need to do dilution later. And I just didn't accept that change.
Yeah.
And that's the lesson for me. It's you've always got to evaluate the changes in the patterns and look for new patterns, because your pattern might go away.
Yeah. Yeah. Oh, exactly. Yeah. It's just like, and that's the challenge, you know. I see what you're saying, because back 2017, 2018, a lot of gappers just faded like right out of the open. Like a lot.
You could add, right? You could add like, on those days. Not now.
Yeah, just recently I was kind of going back and just using edge to trade. I was looking at the charts of a lot of the gappers back then, and so many of them would just fade right away, you know. And that's just not the case anymore. Really, you know, a lot of them don't fade away, and you have some gappers that just stay up and hold up, you know, and for me, and some will still fade, you know. And for me, it's been trying to look at, you know, I like to look at candlestick patterns and stuff like that. Like what type of patterns are still kind of give a good opportunity of a fade, and what other type of patterns are like, you know what, there's probably not a good chance of a fader here. You know, maybe I should avoid it or whatever. You know, I know, and that stuff is still there. It just but it takes a lot more. It has to be. It's a little bit more complicated. It can't be a totally simple strategy, but at the same time, like I said before, you can't be so complicated that you overfit your strategy too. So it's like, you know, and for people that don't understand what I mean by overfit, imagine you. I'll just give you an example of either underfitting a strategy or overfitting. So like underfitting something where there's probably no edge. You know what? I'm going to buy any opening range breakout with a stop at the low of the breakout or whatever, right? Super simple. Like, can't get much simpler than that, right? Well, there's no edge there. I guarantee you, if you run stats on that, there's no edge there. That's not going to be a winning strategy. So let's say then you're like, okay, I'm going to buy any opening range breakout when the RSI is between 90 or 80 and 90 and the moon is full and, you know, whatever. Like, you have all these variables that have to fit, right? Well, that's overfitting a strategy, because that's something like, it's probably not repeatable, right? It's probably, you know, whatever pattern you're looking for has to be somewhat repeatable if you want to make money over time. It can't be so specific that you only can find a few instances of that even happening, right? And so that's what we call overfitting a strategy. So it's a matter of finding that balance between not having enough variables that you're looking at where you have no edge, but also not having so many variables that you're looking at that it becomes too complicated and untradeable and just isn't going to work. And so there's definitely a balance there that you have to find as a trader, and that takes some work, you know. So.
Now it makes us think, keep it simple, stupid, but don't keep it too stupid. It's kind of like that, right?
Yeah, exactly. Yeah.
We'll close out. We've got a quick message from the sponsor, but I just wanted to give you our thank you first of all for giving us your time, especially being one of the top verified traders for Kinfo. But also, I just wanted to give you the opportunity to say any final message, any shout out for anything that you might be doing personally, or any just golden nuggets.
I would just say, like I said, just especially the newer traders and stuff, and even experienced traders. Hey, there's nothing wrong with sizing back down if you're not trading well. Got to think the long game. And then, you know what? There's nothing wrong with paper trading as well. Even when you're an experienced trader, if you're not trading well, just take some time off, figure some things out, doing that type of thing. But yeah, I mean, I do have a website, although honestly, I haven't updated it in a couple of years, but I do have a website, stockwonk.com. I mean, I do have a bunch of articles on there that people might find helpful. Articles about, just general strategy development and paying yourself as a trader, things like that. So, if people want to check that out, they can. I do have some social media accounts too. People can follow me on. I'm not on Twitter anymore, or X. I still call it Twitter. I mean, my account is still there, but I just don't like what has happened to Twitter in the past few years. So I kind of stopped. I don't post there anymore. I'm mainly on Threads now, so that's where I'm most active. But same Stockwonk, at Stockwonk on Threads. So people can find me there. So
sounds great. Thank you so much for your time. Fully appreciate it. Absolute gems of advice. And I think the most important takeaway for me, and I'm sure for everyone else, is the fact that it's the perseverance with the patterns. Because you're living proof of someone like you made pretty much $1 million in 5 months, but now you're persevering to find the next $1 million, right? So perseverance and sizing down.
Yeah.
So thanks so much for your time.
Yeah, thank you.
Thank you so much for watching. And I just do want to remind you one more time about Cobra's ultimate trader package, Cobra Prime. The link is in the description. Click it below. I'll see you on the next one.